All right, let's take a look here at the recent gold rally. We saw gold above 4,200 recently. There's no doubt gold has been a hot area. We were around 3-week highs right now. Stephen Orrell is with me, VP PM of the OCM Gold Fund. Thank you so much for being with us. We did see gold this week above 4,200. Some of your thoughts why everybody has been running to gold over the last few weeks?
Well, first, Nicole, I think thank you for having me. I think it's kind of two main factors here driving gold prices. I think it's kind of a call on the poor fiscal and monetary policy that we've seen over the last few months, but also years. I mean, when you look long term, Nixon closed the gold window in 1971, and since then, gold's had a 93% rough correlation to total federal debt outstanding. So it's on a long-term trajectory up. Secondly, I think still geopolitical tensions are still rising. We've seen a lot of central banks continue to accumulate gold over the last years, and even recent months. It's still climbing. So I think people are seeing that they want to join in on what these central banks are doing and diversify some of their assets.
So what's the strategy? Because you said the highs are not the end of the story. I guess we're likely to see more highs. The most recent high was 4,398, nearly 4,400 a troy ounce. In October, we got to 4,200 this past week. I mean, how high does gold go?
Well, you can't put a number on it. I think, you just play the long-term game and allocate. What we do at OCM is we recommend allocating some portion to gold in your portfolio. But then if you want to get leverage on that, you play the gold miners who are seeing historic margins here. You look at what gold miners have been reporting over the last few weeks. It's all record cash flows, record margins, record earning per share. So that's, if you're looking to play the gold market, that's obviously one way to do so.
And so now there are different ways to invest in gold. I mean, assuming you still think this has room to run, 4,400 you said is not the high. It's going to trend higher over time. How do you suggest folks get in and benefit from a gold run, a gold gain in the future?
Well, like I said, I think you split some of your portfolio into, you could go physical and you go buy from bullion shop and go do that. I mean, Costco sells gold, right? You can buy it on the ETF GDX, which has seen a 57% rise this year. But then if you want to play the miners who are a leverage play on gold, who have seen, the GDX, which is the gold miners index, has been a roughly 120-something% return this year. Wow. That index has seen $3 billion of outflows over a one-year period. So if you're looking for opportunity, I think that screams it, in my personal opinion. And that's the way we're doing it. And I think you play along from the majors who produce the most gold over 1 million to, I think, all the way down to the explorers. But you have to tread lightly in those areas because there's a lot of landmines as well in the gold industry.
And when you talk about your fund there, I mean, there are always big names in there like Barrick, for example, Agnico Eagle. Talk about some of the specific names. What are they doing right?
Yeah, well, let's look at Agnico. One of the biggest gold miners has actually surpassed Barrick over the last few years. And what they've done is focus on keeping their costs low and working in safe jurisdictions. Some of the headwinds that some of these gold miners have seen is when they go to riskier areas in some Latin America or African countries, is they see geopolitical risk. So when you're Agnico Eagle and you focus on Canada, USA, and Australia, you have safe jurisdictions where you can get your gold and produce it safely, and the market will pay a premium for that, as we've seen as they become rivals with Newmont and Barrick over the last 10 to 15 years. So they've been the leader. We like to play sometimes in the smaller areas in the junior space where companies can sometimes see their cash flow really pick up when, margins expand like we're seeing right now. I mean, we're in a stagflation type environment. I think if you look at where the oil price is, which is a huge factor in the cost of these producers, and with oil going down, but gold going up, their margins are expanding. So when you look at sometimes you go down from the majors of Agnico, that's where you start to see the real leverage on this gold price.
And the OCM Gold Fund overall, I mean, has several of these names in there. What about silver and copper and platinum?
Well, so we are only precious metals based, so I can't really speak to platinum. But on silver, it tends to be a bit more volatile than gold. It's, known as poor man's gold. And I think we're catching a delayed bid here, like around over $50, excuse me. We remain bullish on silver going forward. But as a play in the fund, it's a smaller percentage of the fund, but we still have an allocation of roughly 10% to silver producers, and think it's going to play catch up to gold in the near to long term future.
Why do people, sort of battle gold versus Bitcoin? Do you hear that often? Do people say to you, should I buy gold or Bitcoin? They're obviously so different. What do you tell folks when they ask you that?
Well, it's a very mixed bag there, right? I think you can look at Bitcoin. I think, it's closer to, I would say, the NASDAQ than gold. You have quote unquote scarcity, but Bitcoin, I think, is great for if you're transacting in a, maybe an emerging market where you can't trust what your currency is going to do. I think that's a pro of it. But is it, I think I just read a story the other day where China and US are going at it with who's stealing each other's Bitcoin and at billions of dollars. So I don't think countries are stealing and hacking billions of dollars of gold, right? So I think they're very different. If you're younger and can play the volatility of Bitcoin, go for it. But it's not something that we specialize in or something we necessarily recommend.
And what about, the US dollar, bonds? I mean, gold is a portfolio, part of a portfolio that you think is a must. Are you watching the fluctuation in the dollar and or what the Fed does next?
To an extent, I think to my earlier point, we're thinking long term here with federal debt outstanding at OCM. So we're not Fed watchers. I mean, I think you saw yesterday one of the Fed governors said they were going to retire, and gold shot up $50 because they think Trump's going to put someone in there that maybe they can't trust. So we'll pay attention to it, but I think over the long haul, you look at the political will of either side as the Fed kind of gets stuck in a box. It's good to have a portion of your portfolio in gold to kind of hedge some of that dollar risk.
You did mention M&A activity. Where does that fit into the picture right now?
M&A in the gold industry started to pick up. We remain pretty bullish on as these companies produce record cash flow. What are they going to do with all this cash, right? Most of the big ones have said, hey, we're going to give it back to shareholders, which is great because in the last bull cycle, they were divvying out their shares for bad M&A deals, and it turned a whole generation off of gold miners for a reason. But now they're learning from their past mistakes and, giving money back to shareholders with dividends and buybacks, but also hoarding some of that cash for M&A. And we've seen a few deals come down the line. We are stacking some of these exploration and development companies as, we think those are going to be targets for these majors who have not invested in putting drill bits into the ground and been exploration because they haven't had the cash to do so. So they rely on these smaller exploration companies to go do that. But so we'll see some, and something to be mindful of with this high gold price is that these exploration companies will actually be revived from past projects that weren't economic then, and all of a sudden they're economic. So it's something for people who, they need to be wary of when they enter the space. And I'm going to toot our own horn here. And you want people who have learned their lessons before and know what they're doing and what the pitfalls are of the industry and where these projects aren't economic. So you have to be careful when you're looking at M&A projects and targets.
Gold 5,000, gold 10,000. Final thought.
Looking for the sound bite. I think it goes higher. I'll say that. But in the long term, in the short term, it could go lower. If anybody tells you that they can predict the gold price on a certain day, they're lying to you.
All right, Stephen Orrell, great to see you, VP PM of the OCM Gold Fund. Thank you. Great to see you.
Thank you.
Appreciate it.